Europe's economy has been under scrutiny in recent times, with concerns about its stability and potential collapse. This article aims to provide a comprehensive analysis of the current state of Europe's economy and the factors that could impact its future. We'll examine the challenges faced by the European Union, the impact of shell companies, and the recent controversy surrounding European car imports. Let's delve into the details. The challenge of shell companies. One significant issue plaguing Europe's economy is the presence of shell companies, which pose a risk of money laundering, tax evasion, and sanctions avoidance. Recent data from Moody's reveals that there are nearly 5 million suspect companies in the UK alone, while the EU has nearly 4 million, with France and Cyprus leading the pack. These empty corporate structures allow individuals to evade taxes and sanctions or launder money. Moody's analysis uncovered astonishing findings, including the registration of thousands of company directors under the age of 5, and even one Belgian firm run by someone over 900 years old. While some errors may be attributed to data entry mistakes, they highlight underlying problems within the system. Ted Data, head of the financial crime compliance team at Moody's, suggests that the lack of resources in official registries, like the UK's Companies House, contributes to the issue. EU lawmaker pressure for change. EU lawmakers are pushing for stricter regulations to address the issue of shell companies and their detrimental impact on tax collection and sanctions enforcement. Paul Tang, chair of the European Parliament's Tax Committee, emphasizes the need to tackle tax avoidance and sees shell companies as a significant obstacle. He supports the Unshell Directive proposed by the EU Commission in 2021, which aims to potentially deprive companies with suspicious activity of tax benefits based on income, cross-border activity, and governance. However, passing the directive into law requires unanimous support from all 27 EU members, including countries like Luxembourg, accused by the Commission of facilitating aggressive tax planning. Despite the urgency, some governments, including Belgium, have been hesitant to move the Unshell file forward due to concerns over administrative burdens. With the EU Council presidency currently held by Belgium, Tang hopes for a renewed examination of the issue. Screening companies for dubious activity. Efficiently screening companies for dubious activity presents a genuine challenge. Striking the right balance between precise criteria and avoiding vagueness is crucial. Too vague criteria can lead to increased paperwork and legal uncertainty, while overly precise criteria can be easily circumvented by money launderers. Analysts refer to this as the infinite game between enforcers of anti-money laundering rules and those attempting to bend or break them. Data suggests that raising the cost of obfuscating wealth is an effective strategy to deter illicit activities. Every regulation and insight makes it more challenging for individuals to engage in nefarious activities, deterring them from pursuing such paths. It is essential to look beyond the indicator of a shell company and examine the people behind it to identify other signs of potential illicit activity. Europe's economy and growth forecast. Moving beyond the issue of shell companies, let's examine the state of Europe's economy and its growth forecast. The European Commission recently downgraded its growth forecast for the EU and the Euro area, predicting a modest 0.9% growth for both regions. This revision reflects a decrease from the previously expected 1.3% growth. The Commission highlights that the EU's economy entered 2024 with subdued momentum, facing several challenges. Falling inflation and monetary policy easing. The start of 2024 has witnessed lower interest rates in some market segments, indicating a potential shift in bank lending volumes in the coming months. Markets are already pricing in a possible monetary policy shift by the European Central Bank, ECB, with expectations of a rate cut as early as the second quarter of 2024. Cumulatively, the anticipated cuts may reach 200 basis points over the forecast horizon. However, the European Commission warns of high interest rate volatility, suggesting that markets are still grappling with uncertainty until the ECB commits to a defined path towards monetary easing. Such volatility could impact the effectiveness of monetary policy measures in stimulating economic growth. Germany's economic challenges. Germany, Europe's economic powerhouse, faces its own set of challenges. Economic sentiment indicators remain disconcerting, with January figures hitting lows not seen since the COVID-19 crisis, indicating weak economic activity for the first half of 2024. After experiencing a 0.3% contraction in output in 2023, Germany is expected to see a modest increase of 0.3% in 2024, down from the earlier forecast of 0.8% in autumn. The projection for 2025 remains constant at a growth rate of 1.2%. One of the key bottlenecks to economic activity in Germany is the shortage of labor. The country also faces challenges in achieving a trade-driven recovery due to stagnating export and import dynamics. However, there is some optimism as market financing conditions have recently eased, with more accessible bank lending expected to provide continued relief. Germany, as Europe's economic powerhouse, faces its own hurdles with weak economic activity and labor shortages. However, improved market financing conditions offer some relief. Disparities in growth exist among EU member states, with smaller economies expected to outperform larger ones. The recent controversy surrounding European car imports and forced labor allegations highlights the need for companies to address human rights risks in their supply chains. As Europe navigates these challenges and explores opportunities for growth, policymakers, businesses, and individuals must remain vigilant and committed to addressing issues such as money laundering, tax evasion, and forced labor. By implementing effective regulations and fostering transparency, Europe can work towards a more stable and sustainable economic future. If you enjoyed this video, please subscribe for more videos on interesting topics like this.